कीजिए।
White shirts कितने plain और simple. Fog scent plain और simple white shirt को बना दे special और fashionable. Fog scent new fashion wear for men.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets recover from the lows of the day but trade with cuts on expiry day. Pharma and IT stocks lend support while auto stocks continue to drag. Aurobindo Pharma is the top gainer on the Nifty despite being excluded from the Nifty 50 index from April 2nd. Sun Pharma is among the top gainers on the Nifty as the re-inspection of its Halol unit comes to an end tomorrow. And Liberty House says it will approach the NCLT a day after Bhushan Power and Steel's Committee of Creditors reject its final bid for the company.
Well, those are the headlines. Thanks for tuning in to Countdown, viewers. My name is Neeraj Shah, and the market's lying flat. It's a flat trade, so there's a bit of a recovery from the lows of the day, if you will. Look at this surge that has happened in the last few minutes of trade. So you're back to about 10,380 kind of levels. That's the key 100-day moving average around which we've been hovering for the last few sessions. I would reckon the Nifty Bank too has recovered a little bit of lost ground, and it will be interesting to see what's the impact on the advanced decline ratio as a result of this late 15-20 minute surge that we've seen. Well, maybe a bit of a convergence, but still in favor of the declines, though. Yes, off the advanced decline ratio mismatch too is off from the levels that it was at the start of the trading day. The heat map will come up on your screen. Remember, when we started off trade, it was awash with red. Now some bit of a clawback by the greens as well, and no clear trends there. Aurobindo and Sun Pharma are in the green. Dr. Reddy's is in the red. IT though, by and large, at least at the mid-cap end of the market, was looking okay. In the large-cap space, HCL Technologies and Tech Mahindra, plus Infosys as well, amongst others, which are leading the charge, so that's not too bad. And commodities, by and large, have had a slightly iffy day. So the likes of Ambuja, which is, of course, an exclusion, but GAIL, there's ONGC, which is facing a bit of pressure in the session today, and the steel names at the broader end too, the likes of SAIL, Uttam Galva, other names like Graphite India, etc., are all facing some bit of pressure in the session today. But if that's the action of what's happening to the main markets, it's also very important to take stock of what's happening to the liquid markets, considering its FN expiry as well. And Navneet, what are you spotting?
It continues to be a weak day, and definitely we can expect a volatile trade to come by in the last hour of trade, considering today is the expiry. And let's not forget, February series has not been so good for the markets. In fact, we've seen about over 650 points being shed for Nifty for this series itself. But overall, if you look at the sectors which are supporting the markets today are Pharma and IT. And also, if you look at the options data, what sort of range can you expect where the expiry can take place? We've seen a lot of writing coming in for the 10,300 call strike. And if you look at the 350 call and put, both of them are very active today. And the index for majority of the session was actually trading around that mark. The premium on the call side is 30 and on the put side is 15. If you club the premium, it becomes 45. So you can expect the expiry to take place within 50 points range from the current levels on either side. And if you go by that level, it looks like the expiry could be somewhere about 10,000 on the downside to about 10,275 and to the upside of about 10,400 or thereabouts. But the recent low of 10,276, which was seen on February 6, remains in focus on the downside in case the index slips once again. But overall, what's the sort of range that one is looking at for the March series? If you go by the open interest concentration, it is at the 11,000 call. That's where the maximum OI is sitting, and the 10,000 put. So once again, we are staring at a pretty wide range, so to say, for the March series. Let's look at a couple of stocks which are in focus before I go through how the FIP series so far has panned out. I want to talk about Biocon. That's the stock which has been in focus. In fact, it is up on very high volumes in today's trading session, and we've seen good amount of build-up coming in. In fact, the February futures, look at that. The open interest for the February futures has risen nearly 40%. Mind you, this will get unwound towards the last hour of trade because today is the expiry. Besides that, PC Jewelers, the stock has been in focus for this series. Remember, it's the top F&O loser, down almost 40% for this series, and it is trading weak in today's session as well. So watch out for this counter in the last hour because it's fallen 40% for the series. There could be a bit of short covering rally that can come about, but watch out for this counter. But still, there are short positions that are being built on the March futures of PC Jewelers. And quickly, I just want to highlight how the series has been so far. For Nifty, we're down almost 6%. Clearly, the banking stocks have underperformed. So Bank Nifty is down about 9. And the clear drag this time around was the Nifty PSU Banking Index. That's fallen nearly 16% so far for this series. And the mid-cap index, the broader markets also succumb to pressure. The Nifty mid-cap index has seen cuts of about 9% for the series so far, Neeraj.
Yeah, I was just trying to see if there are specific pockets at the broader end of the spectrum which have marked moves in the session today. Navneet has already done a bunch of market spotting. Just watch out. One for Vakrangi Software, which continues to drag lower, so another 5% down in the session. We marked Biocon and the open interest movement there, and that is doing okay. But watch out for the IT names. Everything from a NIT Tech to a Persistent and a couple of other mid-cap names seem to be doing rather well for themselves. Let's talk about all of that and more with Shailendra Kumar. He's Director and CIO at Narnolia Securities, joins us right now on the show. Good evening, Mr. Kumar. Thanks so much for joining us on Bloomberg Quint. What have you been observing? It's been a while that we spoke. How has investor behavior been in that intermittent period? A follow-up question to that also is, are you getting a lot of investors who are booking profits in order to not get impacted by the LTCG rule before March 31st? Is that happening?
Yeah, so great. Take the first question, the market reading. So with calendar year 2018, I assume we are now in a very normal market. Unlike the previous 2 years, when you had almost linear straight line rally in the market, like so. Market normally should behave in a fashion where you have couple of very dull month, couple of falling month, couple of rising month. But we had a very abnormal market, just rallying. So month-on-month return was almost positive every month last calendar year, which is not normal. And I think with the start of calendar year 2018, a lot of things have changed. So macro remains very stable. On margin, bit of a distress, but that's not big. Technically, a lot of things have changed. So I spoke about the low wall that was happening in the world market. So if you look at the VIX index of US or maybe in India also, they were at the multi-year low. So so they were in a regime of a very low wall, straight, linear rising market. That has changed. Now everything is back to where the markets are assumed to be on a normal basis. So you have a Gaussian curve playing out. So we are more normal market like, and fundamentally bit of change has happened, which we have noticed. Like so, couple of months back, for FY19, the consensus was estimating a EPS for Nifty to be about 600 plus, which has got a little watered down now. It's close to 590. Though our estimate is even a little lower than that level. So a lot of things have changed, surely. In terms of long-term capital gain tax and impact for in client psyche, so we have seen couple of instances where particularly large HNI investors have tried to book some profit because of the not because of tax issue, but maybe because of more worry around the tax issue, not exactly the tax issue. But on the lower level, I can see and I can sense there are a lot of demand for Indian equities. So nothing massive out there. Bit of profit booking surely.
Okay, and clearly there has been profit booking which has come in as we've seen the markets correcting from those highs of 11,100 to about 10,370 thereabouts. Mr. Kumar, one sector which is providing strength to this market is the IT pack, which so far was underperforming for the last 1 year. And it's not just about the mid caps now. Finally, the large cap IT stocks are also moving higher. Anything in this space that you like or you think according to valuations one can enter here?
See, IT had been a little sweet spot for last few months. A lot of things have changed positively for IT. Margin for every quarter, last 2 to 3 quarters, margin has remained stable for all the IT companies. That's one. Sorry. Number two, if you look at the way the developed economies, the GDP growth rate happening out there, so naturally the headwind for business expansion exists. Number two. Number three, the digital initiative of most of these IT biggies now getting a proper traction. And the trigger basically in January was, Trump tax. So one part of US corporate which were operating in IT space through their captives in India and other countries. Now those captives are taxed, differently. So what will happen? The competitive intensity on the local outsourcers like Infosys of the world, they will have a little bit of pricing advantage over the captives of US corporate. So bit of a trigger also in terms of that. So those are all working in positive. That these things translating into earning will take a bit of a time, and I think. Maybe middle of this calendar year 2018 we will have more clarity on how the earning will pan out. So right now the kind of run up IT has seen, I would say there are positive ingredients, but the rally is mostly mean reversion because the translation of those positives into earning will take a bit of a time.
A lot of these stocks have actually started to move in the last 2 days, Mr. Kumar, after NASSCOM gave its guidance for FY19 between 7 to 9% for the sector. But what about the broader markets? We've seen that also, coming off, and broader markets had outperformed the benchmarks in 2017. Any sort of buying opportunity or bottom fishing that you're looking at, considering we've come off considerably from those higher levels?
Right. See, bottom fishing is surely advisable, but the idea is where is the bottom, like where we will want to go and fish. So the Nifty EPS is the key guidance which can help us figure out, where the trough will be. So if I go by the consensus Nifty EPS of about 590, and if we assume that going forward, because we are in a structural bull market, so the earning multiple or the P ratio of the Nifty overall will be in the range of say 17 and a half on the lower side and say 21 on the upper side. So you can simply compute that about 10,000 is a good point to enter in the market. But I believe there is a good amount of scope for FY19 earning to get downgraded. So we believe the earning will not be closer to 600 for Nifty EPS FY19, but it would be more closer to 550. So about 50 point, as we progress through this calendar year and every quarter result comes, the EPS will be getting downgraded. So accordingly, you have to reduce your bottom points from where you can enter. So if I go by the 550 level, then you multiply by 17 and a half times. So about 9,500 becomes a good bottom fishing. So anything 10,000 or below 10,000 would be a good point to bottom fish. So that's surely recommended.
Where would you bottom fish? I think you started off your answer with that question that people would be wondering where to bottom fish. Let me ask you a question. What's the pet theme? And if there is not a small cap really, but a large mid cap or a large cap idea that you guys at Narnolia have now, a lot of people are now seeking a large cap investment as opposed to a small cap investment. What are you doing out at your funds and with your clients?
Sure. So, as I said, the bottom fishing has to be around a level where the Nifty is trading at 1 year forward PE of 17.5 or 17 times. So, if your assumption is say 550 of the EPS, so about 9500 will be the kind of level where you will be very comfortable with buying those security. And there are good amount of there are good spaces right now in the market. If I look at themes or sectors, so take for so gas utility. So there is a secular kind of a growth for most of the gas utility companies in India. Right now, the kind of area where they are, building those utility services, they have not captured even more than 30% of what the area they have licensed for operating. So good amount of room for them to expand. So kind of volume growth, they will have about 10 to 15% for multi-year volume growth of 10 to 15% for those gas utility, number one. And the prices for those utility has not gone up because the PNRJB has not come out with the new gassing prices. So you have a trigger also, maybe a couple of months down from here, you have a trigger for the realization going on. And already there is a secular volume growth theme for those gas utilities. So that will be one area to explore right now. There are many other names, many in the consumption space, like or could be in the financial space as well, where somebody can go and accumulate stocks.
Before I let you go, Mr. Kumar, just want your view on these pharma stocks which are buzzing in today's session, and specifically the larger ones, Aurobindo, Sun Pharma. And I know there is some US FDA inspection which is going on, and hence the kind of volatility, at least for Sun Pharma, that we saw yesterday. Some bit of pullback seen after seeing cuts of 6%. But let's just talk about the valuations around this sector. We know they are at historical lower levels. A lot of these analysts they talk about, but there's a section of analysts who still feel that the pharma stocks are still expensive considering the kind of earnings they've been reported. The pricing pressure still persists in the sector. How should one approach this sector now? I'm saying now because the markets have also turned jittery, and this is one of the defensive sector that markets looks at when the other sectors are not doing that well. Do you think it's time for a retail investor to now start looking at the pharma space?
See, first we need to understand pharma has not been a defensive for last 2 years, right? See, when you say a defensive sector, the sector has to have a profile where the margins are stable, for longer. So every quarter they come out with a similar kind of a margin profile, and the kind of asset turnover, so kind of capex in the business or the working capital in the business are remaining stable. Now, pharma has just been opposite of what these two variables will require the sector to be a defensive sector. So pharma, in that sense, has not been defensive. Coming to the larger names, their margins are still not come to a point where we can have a very clear view on the margins are either stable or going to go up here. In the business segment also, the businesses like Sun Pharma, if Halol gets through, we don't know tomorrow and day after we will have the news. Unless their specialty chemical business doesn't become larger enough, so they can still be a winner in terms of pricing competition which is going on. So till the time their business model doesn't get settled in a specialty chemical, I think it will take time for them to become defensive again.
Okay. Just one last question, and that is, Mr. Kumar, and that is on what's happening in this metal space. A lot of consolidation moves, yes, but the prices by and large seem to be stable too. Steel companies seem to be enjoying better margins. Where are you betting? Are you betting on JSW or Tata Steel, which now has emerged as the front runner for Bhushan, or you are going for SAIL, which is also showing some visible signs of improvement? Give or take, there are only these three that you can probably bet on.
Right. See, if I have to think in terms of 3-5 year wealth creation purpose, I will not be waiting on any of these names even. So because they are mostly a tactical buy, both on in terms of global pricing of steel, and mostly steel is more volatile because see the 12 cases in NCLT, the first lot of the resolution cases, about 2.6 lakh crore of something going resolved. Half of it is from the steel sector. And shortly we will get some kind of a pricing clarity that Bhushan gets at what price to Tata Steel. Now that pricing will become a benchmark for many of these. So Metal and PSU Bank both will be getting positive traction out of what happens in these kind of resolution. So, but if I look at Metal for 4-5 year wealth creation and a buy and hold kind of investment, I think none of them will fit in my kind of criteria.
Okay, good to know that. Mr. Kumar, great having you. Thank you so much for taking the time out and joining us and giving us that perspective. See you more often on this forum. Okay. That's Narnolia Securities with their thoughts on the markets and specific pockets, not buying into steel companies from a 5-year perspective. That's a rare view, really, at a time when the cycle seems to be going up. But as he said, maybe a tactical buy, but not really a long-term buy. Now, the next company is interesting. Couple of analysts who've come on air today, Parthiv Shah, for example, recommended it. Ambit came out with a note yesterday as well, and that's on Gujarat Ambuja Exports. Now, let me tell you what the company does. They are a leading processor of maize and soybean with exposure to animal feed and food and pharma as well. There is a skew towards maize processing, and which would expand because they've added some further capacity in Maharashtra as well, which makes them the largest player with a 21% market share. But the reason why we also thought of getting in Gujarat Ambuja Exports was there is a tactical upside to the stock price from restoration of competitiveness of the soybean business because of various things that are happening in Argentina and a couple of other pockets. So let's talk about all of that and more with Manish Kumar Gupta. He's the MD at Gujarat Ambuja Exports, joins us right now on the show. Good having you, Mr. Gupta. Thanks so much for taking the time out.
Thank you so much.
Let's just talk about this this soybean business. Apparently there is some drought in Argentina. The US Department of Agriculture has cut the outlook for the soybean crop by 4%. Is this all leading to an upsurge in the soybean prices? And what can it do for your business?
Yeah, for our business, soybean business this year as a whole has been very good, partly due to the pricing which the government has allowed the farmers to sell the soybeans, and they have compensated the farmers by giving them difference between the market price and the minimum support price. So this formula which the Madhya Pradesh government adopted has really worked in favor of the industry. So we could buy the soybeans at the market price, and we could market it at a reasonable price and make reasonable profits. On the second question of yours on the Argentina crop, I think the crop is heading towards 10 to 12% reduction compared to last year. So this means the Indian crush industry will be active. We will have windows to export to our neighboring countries. So this will keep the Indian export program running and the domestic market firm, and even the edible oil prices firm. So all in all, this firmness in India will help the company in the long run. And the Argentine crop definitely is now less by 10 to 12%.
So, Mr. Gupta, again, the question would be one, as I understand, that you mentioned that you will be able to export to the neighboring countries at a better price. Would this only be happening to the neighboring countries, one? And can you share some numbers? I mean, what was the price 6 months ago? What's the price right now? And if you take the full year into account, what's the quantum of growth that the soybean business will show in FY18 compared to FY17?
See, in terms of the prices of soya beans in November, late until December was 30,000 rupees per metric ton. Today, the soya bean prices is 38,000 rupees per metric ton. So there is already a almost 25% jump in the soya bean prices in the domestic market. So yes, the company is sitting on inventories, and we will benefit from the same. On the as a whole year basis, I think we will have much better numbers in the soya bean business.
Can you quantify those? I mean, much better.
No, we don't want to quantify numbers.
No, but in percentage terms?
I think we'll have a substantial, you would have seen the third quarter results, so I think you can make out the numbers, but specific numbers I will not give you, but it will be a substantial increase because there is a very good crush margin this year. Also, the reason for good crush margin is less number of players in the market, which we should not also forget. We being the second largest crushers of soya bean, have also been helped by less number of players in the market this year.
Mr. Gupta, I just want to take that MSP point forward. In the recent budget, the finance minister has increased the MSP prices to boost farmers' income, and I'm presuming soybean will also be covered in that. How does that impact a company like yours?
So I think, you see, the government can increase the MSP, but the cargoes are not sold basis the MSP. So the formula derived by the government this year was fine. The farmers will be paid MSP and they can sell the cargo at market price. The difference between the market price and the MSP is compensated by the government. So if this continues, which probably will have to continue, there is no difference for us because we are not concerned about the MSP. We are concerned we will get the cargo at the market price, and that's what has happened this year for soya beans, or whether it is for corn or for other agriculture produce.
Suggesting is that entire burden of MSP increase will be borne by the government.
It has to be borne by the government. The industry cannot buy, the government cannot force the industry to buy at MSP because MSP is a notional number which they have derived. And it could be so reason that in few years the market is above MSP. That can also happen. So there's a natural phenomenon. They don't have to compensate. But if the MSP is lower, if the market prices are lower than the MSP, no industrialist will buy at MSP. So saying that we will get farmers higher MSP is for the government to decide how.
Okay, that's an interesting insight, Mr. Gupta. I'm just going back to the Ambit report, and one of the key catalysts that they've highlighted for being positive on a company like yours is a production ramp-up of starch and derivatives of the new plant at Maharashtra. Could you talk to us a bit about this new plant? What sort of added capacity can we see coming in on stream, and how much more revenue contribution can be seen from this new plant and added capacity?
Yeah, okay. So our capacity for the starch business is going to increase by 50%. So currently we are at about 2,000 tons per day grind capacity for corn, which is going up to 3,100 tons. So it's about almost 50% increase. The Chalisgaon plant, which is India's largest corn wet milling plant, is already started trial productions, and we are about to commence commercial production in few days. So with this addition in capacity, we should expect in the starch business alone about 500 crores of top line. Bottom line, I'm not discussing, but around 500 crores of top line from this plant alone.
That's an added top line for the full year, you're suggesting?
Yes, that's an added top line for the full year once the Chalisgaon plant starts
and
production.
From which quarter can we see the numbers being reflected?
I think the fourth quarter, I think effectively we only get a month of production. So effectively, I think 18-19 whole year is there ahead of us. So probably we should be able to be close to that number.
Do you reckon, Mr. Gupta, that you can, what's the quantum of growth that you can show on the top line for the full year? Because as I see your 9 months, you've done about 2,500 crores, if I'm not wrong.
Correct.
And last year you were about at 3,400 crores.
I think we will be below. We will be single digit on the top line,
okay.
But on the bottom line, we would exceed the target of last year.
But that would require you to do at least what you've done in this quarter gone by, because you've done about 101 crores until now, and I think last year it was about 159 crores. So you probably need to do about 60 crores at least.
Yeah. So as I said, I'm not going to give you numbers, but
no, I don't want exact numbers, but I'm guessing that
yes, we are on track to achieve the target. We already 1 month left in this financial year. We are almost on the target.
Okay, my last question from my end would be, with the positives within the industry and new plant and new revenues coming in as well, would it be safe to assume that FY19 over FY18, both on top line and bottom line, would show a much better traction than what FY18 will show or FY17?
Yeah, of course.
Significantly better?
FY19 will be much better than FY18.
Okay.
And what about your market share? That's also been one of the key highlights of the report I was reading, that you've been consistently trying to increase the market share. What's the net market share that Gujarat Ambuja Exports has?
At the Chalisgaon plant, our net market share will be 21% to 22% of India's total starch and derivative demand. And we will continue to expand in the starch business. Greenfield projects, value additions, that's all in the pipeline.
Okay, Mr. Gupta, we leave it at that note. It was great chatting with you, and thanks for those interesting insights with regard to the MSP, the increase of MSP which came about in the union budget, and all the best to you for the upcoming quarters. Well, that was the management of Ambuja Exports. If you could just pull up the last 1 year chart. We don't usually speak about this counter much, but actually it's done quite well in the last 1 year. I was checking, it's nearly doubled the stock of Gujarat Ambuja Exports. It's given you returns of nearly 102%. It's everything's going well. As he said, the increase in MSP prices will not dent any sort of margins for the industrialist, because the entire burden will be borne by the government. And precisely that's the reason why we've been talking about how the government may once again miss its fiscal deficit target if it has to spend more towards these things. But that's about Gujarat Ambuja Exports. The markets are still where they were. Nifty is trading around the levels of 10,352. The volatility index, I just want to highlight that before we go across to Neeraj. India VIX is now almost at day's low with cuts of 7%. And let me tell you, this was a key concern in the February series, because we'd seen India VIX moving above the mark of 19.3. Okay, let's talk about a pocket which has provided strength, at least in this series, and put spotlight on persistent systems. The stock is up for the third straight day today. It has also risen to its highest level since February 13, 2015. Neeraj is here to analyze the stock, courtesy the Bloomberg terminal. Neeraj, over to you.
Yeah, so, we interviewed the management yesterday, and the stock didn't move too much yesterday. I just thought, because it's active today, just bring out what they had to tell us. They mentioned that they'll invest in sales and salespeople, and therefore it's difficult to take a call on margins moving higher. He was very clear that if they will do something, they will pursue more revenue growth over the course of the next 12 months. It may not come at the cost of margins. They will not be reckless about it, but it certainly seemed to be suggesting that margins will not move up dramatically. They did believe that the growth for the company would be much comfortably higher than the band that NASSCOM has suggested. That, coupled with maybe the rupee depreciation or otherwise, leading to IT by and large moving up and persistent moving up in tandem. Remember, it's been a marked underperformer compared to a lot of other mid-cap IT names, to be honest. But in today's session, it's doing well, both on the volumes front as well as the price front as well. And the GD will come up on your screen, and you will see what I'm talking about. One, as I said, it trades at a slight discount to the peer average because it's not done as well as the peers have. A lot of people have a buy call on the target price higher than the current market price as well. But in today's session has seen some bit of buying too. Over the last few days, the volumes naturally have moved up, but in today's session, the volumes have certainly gone up much higher, almost 50% higher than the 20-day moving average as well. So goes in line with what almost all the other IT companies are doing. Persistent, not too far behind Ambit.
Well, not at all. It's the entire IT pack has been doing well, but the Nifty IT index, I guess, as we speak, has come off day's high, which was providing a bit of support to the markets. And as we speak, the top gainer on that, as you can see, that's the intraday chart, and it has come off day's high. Mindtree is still trading in the positive, but you've got the large caps, actually, from the likes of TCS, that's turned red, and Infosys and HCL Technologies are now just sitting with very minor gains of nearly 0.5%. Well, from the broader markets, I want to highlight few stocks. EIH Associated, we did mention the stock in yesterday's trade as well. It was locked in upper circuit with gains of 20%, and once there has been some bit of buying which is still continuing in this counter in today's trade as well. EIH Associated today's trading with gains of nearly 11 to 12%. And from the ID pack, Nuclear Software is up 7%. You've got Quality, that's been quite strong since the morning session. I was seeing Quality is trading with gains of nearly 5 to 6%. And Lokesh Machines, let's just pull up the intraday chart of that as well. I think that's also moved up just in last 15 minutes of trade. Lokesh Machines is now trading around with gains of nearly 6%.
Well, let's get in our technical experts on board then. Sumeet Bagadia of Choice Broking, as well as Bala from Cash the Chaos, join us right now on the show. As we speak, the markets, of course, have come off. Gentlemen, both of you, thanks so much for joining in. Jay, what are you doing? It's expiry day, maybe difficult to do short-term trades, but are you taking positions on any of the key indices?
Yeah, it will make tremendous sense to be long on the IT index from a short term as well as a medium term. And you got to be. There is a possibility that you can play a long on the IT and a short on the broader Nifty index. But it's better to be neutral on the broad index and be long on the IT index. That way, the rewards will be proportional to the risks that you're taking. When on the budget day we spoke about the possibility of the IT index correcting to for about extreme short term and then positioning ourselves long there. The IT index has done exactly that. I expected the index to come to somewhere close to 12,100 to 12,000. It has come to 12,200. I think the medium term is shaping up pretty well for this index. I think we are looking at record highs past 13,500, somewhere close to 14,000 on the CNX IT index.
Okay, Sumeet, how are you approaching the last hour and a half of trade? Can we expect more volatility or a bit of short covering rally, considering the markets have corrected a lot in this series?
Hi, good afternoon. Well, see, as far as index is concerned, what we have seen in Nifty is that Nifty is moving in a range. Immediately, the supports are placed at around 10,300 levels on lower side, and on higher side, the resistance is placed at around 10,500 levels. Either side breakout will give a move of around 150 to 200 points in Nifty. Looking at the chart, it seems that index has support at around 10,300 levels. Till the time these levels are not taken away, it's better to be on buy side. If there is any dip of 20 to 30 points from present levels, then that should be used as a buying opportunity. For a trading perspective, immediately 10,400 can be the target. Once 10,400 is taken away, we can see move till 10,450 and 500 levels. And a breakout above 500 will give me conviction for the targets of 10,700, 800 levels. Till the time 10,500 and 10,300 is not taken away, Nifty will move in a range. And at present, it's better to be on buy side with a stop loss of 10,300 on lower side.
Okay, let's talk about specific stocks as well. Jay, are you taking any stock specific bets, either on IT or otherwise?
Yeah, definitely. IT is my preferred path for the play on the markets now, and we've seen nucleus shine very well in this market, and the rest of the peers within the IT space is going to do that pretty much quite soon. And I like two names within the space. In fact, we are spoiled for choice within the IT space. There is not a single name that I find it unattractive within the IT space. Earlier it was the mid caps that were firing, and post this correction that we saw from the highs of 13,500 on the Nifty IT index, I think even the frontline names are starting to look good, like TCS, Infosys. But from a risk reward perspective, I like two names. One is Tech Mahindra. Tech Mahindra, I think, is going to take out the 2015 highs of 750. So, and given that where it's placed at the current level, I think the possibility of it pulling back to a maximum of 520, 525 is what I see. Maybe it may not even go there. It might even hold this week's low. And so, given that kind of potential, I would position myself long in this counter and expect the stock to cross 750 in the next 2 to 3 months. And another name that I like is HCL. Like I said, even the frontline names are starting to fire. So HCL is probably looking like it'll go past 1100. And I think the downsides here are pretty limited here. And I think it's unlikely to fall below 900. So once again, it's presenting a low risk entry point at current levels, and you could place a stop below 904, somewhere 1% below that, and look for the stock to scale 1100 in the next couple of months.
Well, all IT picks from Jen. Jen, after a while, I'm hearing someone saying that you're spoiled for choice in the IT space, a sector which was so far reeling under pressure, at least in the last 1 year or 1.5 years. Sumeet, I'll come to you. What about your trading strategies for the day? I can see some buy calls on the list.
Yes, you're absolutely right. What we are seeing is that we are seeing some upside momentum in a couple of stocks. So the first stock for the day is Adani Port. Adani Port has given a good move from lower levels. Now from here on, what I can see is that we can see a move of around 20 to 25 points in the next couple of days. So for a trading perspective, one can initiate long positions in Adani port at CMP, that is around 402 levels, with a small stop loss to be placed at 390 levels on lower side for the upside target of 425 levels in next couple of days. The second pick for the day is from banking space, and that is Kotak Bank. Kotak Bank is looking good to me. It has not given a correction, and in last couple of days we have seen that the stock has been consolidating in the range of around 1060 on higher side to 1030 or 1020 on lower side. I think for a trading perspective, one can initiate long positions in Kotak Bank at the current market price, with a small stop loss to be placed at 1030 levels for the upside target of 1100 and 1120 next couple of days.
Okay, so those were the trading strategies from Sumeet and our experts. But let's also bring in our fundamental guest, Mr. T.S. Harihar, founder and chief executive at HRBV Client Solutions, joins us in the studio now. Mr. Harihar, it's always good to have you here right in the studio. What's the view now? The correction continues for the markets, and let's discount today's day because it is the expiry day. We'll see some bout of volatility to emerge once again in last hour of trade. But how should one approach the markets now at these levels, since we've corrected significantly from 11,100?
See, I think the big problem for the markets now is there is an absolute absence of triggers to take it up. There are overhangs, oil prices at $65 a barrel. There is a worry it could go back to 70. There is a dispute whether there will be 3 rate hikes or 4 rate hikes with the Fed. So I think there's a lot of international overhang that is probably holding the markets back. As a strategy, I think firstly it's going to be a hard market to trade because there's going to be a lot of volatility. But I think this is probably the time when you should look at sectors which have been beaten down drastically and which are looking as good value plays. I was talking to some of my clients the other day. I said, what is wrong with PNB? You got a PNB at 200, everybody wanted to buy PNB. Today at 110, people are thinking twice. And nothing has changed. It's the entire exposure to diamonds is about $2.8 billion. And we have an NPA mountain of about $260 billion. So we are looking at the entire NPA going up by about 1% if you add up all the diamond debt to the banks. So I don't see anything wrong in buying PSU banks now. It's okay to chase private banks, but I think the valuations are ridiculously steep, and I don't think we make money at those levels. So I think if you're really brave, if you're really...
How much money will you make even in PSU banks now? Is there a risk involved because of whatever has been happening?
See, let's understand two realities. One is these banks are going to get recapitalized. And I think today the government has very clearly said that we'll probably prepone the recapitalization and we'll also increase the recapitalization. There is actually no choice with the government.
The government actually said that they will not give a higher recap amount to PNB. That they're on record saying.
No, that's fine. But then the whole issue here is that that is subject to the fact that PNB is proven to be guilty in the whole thing. No, this is not a guilt of PNB alone. Okay, see, this is a larger, what I would say, a compliance failure, not just of PNB, but a host of banks. And I'm sure if PNB had been lax and the other banks had been totally up to the mark, then we would not have had this scam at all. So it is a larger systemic problem, and I believe at some point government has to come in and bail these guys out. And they're not that they haven't bailed them out, they've bailed them out.
Taking that for granted that government is going to come and bail, so let's buy the stocks.
There's no choice. There's no choice. Let's understand. There's no choice. What are the choices the government has? I think they are going to bail them. And see, nothing wrong. You have a bank like PNB, which is I think a asset size of about 4 lakh crores, quoting at 30,000 crores of market cap. I think now it's about 24,000 crores. I think it's a bargain. You may have to wait for 6 months, 1 year, but I don't think it's something so drastically dangerous that all these PSU banks are going to shut shop and go. Nothing of that kind is going to happen. So I would believe that you've got to be brave at these levels. You're getting PNB 50% lower, you're getting SBI 35% lower. So probably get into this market, be a little brave and start buying this.
Well, they'll definitely not shut down. I think 60 to 70% of Indian population still banks with the PSU public sector banks, and you may get some return from, I'm sure, from the current levels. But I remember when the recap news has come about, PNB was the stock which rose 40 or 45% in a single day. Why? Because there were hopes, they were putting up good numbers, so they'll be allocated more when the recapitalization amount comes about. But that was not the case actually. The government tried bailing out the banks which are not doing that well.
No, I think the government strategy is slightly different. The way I understand is that there are some banks with the gross NPA of more than 20%, like an IDBI or I think an IOB, I don't know, there are 3-4 such banks, or the OBC. Now, obviously, the government needs to take a quick decision as to whether these banks should be allowed to continue or probably be merged out. PNB is a different league. I think it's the second largest bank among the PSUs. So PNB has to survive. So the question is, what do you do with the smaller banks? So I think first you take a decision on the IDBIs, the IOBs and the OBCs of the world, and then you come to a PNB. So I don't think the government probably, I thought, was on target. Probably this whole diamond story is kind of slightly queered the pitch for banks, but I would believe that it's a matter of 6 months. All will be forgotten and things will be back to normal. There's nothing much to worry on that.
Okay. Well, let's see if all is forgotten for Pharma or no. In fact, it proves to be a really important time for Sun Pharma in particular. Tomorrow is an important day as the US FDA re-inspection of the Halol facility comes to an end. Now, you know, a lot of people have been hearing about Halol and Sun Pharma, but what significance does this plant hold for Sun Pharma? Darshan is here to tell us more about it. Darshan, why is Halol so important?
Yeah, so basically what has happened is that, you know, it's one of the largest plants that Sun Pharma has currently, and a significant amount of approvals have not come in. So that's the big issue that, you know, Halol has. So basically what has happened is that, you know, over a period of time, US FDA has inspected the plant, they've re-inspected the plant, but they've not been able to get it. Now, this is the timeline. In September 2014, it was inspected by the plant for the first time, at least in this saga, what we are talking about. The next in itself, they got a Form 483 with 23 observations. That actually started the downfall for Sun Pharma and the share price, because that was the big concern that happened. Now, in December 2015, for this September 2014 Form 483, they got a warning letter. Now, a warning letter means that, you know, future approvals will not come in. Whatever you are selling is fine, but the new approvals will not come in. Now, in November and December 2016, the plant was again re-inspected by the US FDA. And what happened here is that they got a Form 483 with 9 observations. So this is where it gets tricky. So they have already an existing warning letter, and over and above that, they got a Form 483 with 9 observations. There were no data integrity issues, but a lot of procedural issues which Sun Pharma needs to change. And finally, here where we are today in February 2018, where the Halol re-inspection again restarted. It started on the 12th of this month, and it will go on till the 23rd of this month. So that's the entire story as far as Sun Pharma is concerned. You can see on the screen. So the Halol re-inspection began and it will end tomorrow. So this is the entire timeline of what happened with Sun Pharma. Now, basically, how has Sun Pharma moved? Pre the US FDA issues, US sales were 22% from Halol, and overall Halol contributed to 12%. Now, post the entire issue, there were 2 issues. First of all, not 2 issues. One issue is falling sales and not getting approval. Secondly was integration with Ranbaxy, so the base became bigger. But still, 11% of the US sales and 4% of the total sales. So Halol is rather large for Sun Pharma, and key approvals are not coming in from there. Now, in terms of the Halol current status, there are no approvals that are coming in. They can sell only approved drugs, and they are facing remediation costs. So that's the current problem that Sun Pharma is facing because of Halol. What is the current, what will happen, and what are the likely possibilities for Halol going ahead? That is something that we'll discuss. If you're looking at Halol, the first point that we want to look at is there will be a sentimental boost on the stock if Halol gets cleared. We're not saying Halol will get cleared. We are just saying if Halol gets cleared. So if Halol gets cleared, there is a sentimental boost for the stock, and that will work positive for the counter. Secondly, new drugs can come in. Approvals will come in. They have certain drugs of Spark also, which will be manufactured. Zelpros, Elepsia are all from this drug, but they are all awaiting approval. So if Halol gets the approval, also watch out for Spark. And US pricing pressure may continue. That is what analysts say. So they are saying that, you know, despite Halol getting cleared, there will be a sentimental issue, but the pricing pressure for Halol will pretty much continue. So that's the general trend that we're getting on Sun Pharma. We'll need to watch out what happens tomorrow, but clearly it's an important plant for Sun Pharma, and the clearance is something that, you know, the street is watching out for.
Darshan, I just have a question. I'm a little confused. What happens to that warning letter? Let's say everything gets cleared tomorrow, but that warning letter still remains, that they cannot come up with new drugs?
So basically what will happen tomorrow is that basically how this will work. Once the US FDA goes, at the end they will give this Form 483. So tomorrow Sun Pharma itself will know what they are facing next. So if they get a Form 483 which says that, you know, these are the 4-5 points you need remediation, that will happen. If they say that there is more issue, so if they believe that this remediation can happen, they will have to make the changes to their plant and communicate back to the US FDA in 15 days. And if the US FDA is happy with the remediation, they will lift this warning letter. So they will come out with a statement and give Sun Pharma the letter indicating that, you've done what all we have told you and your warning letter is lifted. So that is how the entire sequence will work. If they are still not happy with it, they will again tell Sun Pharma to go back to the remediation. If there are much more observations, let's say there are 4 or 5 observations, probably they will say that, give us your remediation plan. If there are more, there could be another re-inspection, and usually re-inspections take a lot of time. So probably next year or the year after. So this is very important, how many observations they get and what kind of observations. That will depend what happens.
Wow. So if indeed they do not pass the test tomorrow, it could be 6 months to 1 year before the next reinspection.
Easily.
Great. Darshan, thanks for putting that into perspective. I think this is important. A lot of people don't quite know that Halol is so important, and I think this is putting that into perspective. Hari, assuming that it's an all clear, I mean, whatever, 3-4 observations, and they are able to meet that in 15 days, etc., etc., there will be a flash upside for sure.
Yep.
Post that, what does one do? Let's say somebody is not the fastest finger first, is not able to beat that smartest trader in any of the cities in Mumbai or in India, and sees the stock 7 or 8% higher tomorrow. What should he or she do post that?
See, firstly, if you're holding on to the stock, I'll say get out of it.
If it goes up.
If it goes up. And if you're holding on to the stock, or if let's say you buy the stock today, in anticipation of what's going to happen tomorrow, you get it 8% higher, I would say just come out of it. See, the reason is very simple. The whole pharma story was built on that reverse engineering and lower costs. I think lower costs are no longer the case, because there are other pharma companies from Israel, from Vietnam, which are able to manufacture most of the drugs at lower rates than India does. And the kind of pricing advantage that they enjoyed in the Indian markets and the international markets, I think that's almost gone. Literally, they are being squeezed for margins across all markets, be it Europe, be it US, or even be it India after the new NPPA came in. So even if this thing gets over, I think it could be a sentimental one-off boost as far as Sun is concerned. But I would believe that in case you are long on pharma, probably use that opportunity to just book your profits and get out of it, because I'm not very positive in the pharma space overall. And I think it is a industry that is gradually adjusting itself to lower valuations in future.
Jaya, Bala, is there a trade existing? Leave out Sun. That's an event-based risk out there. I mean, I don't know if you want to trade Sun, but let's assume that you don't want to trade Sun because there's an event-based risk there. What about some of the others?
Yeah, fair question. Pharma is not in the same space like IT, where IT, almost every counter is looking pretty good. But whereas in pharma, if you want to have a trade or if you want to be investing in it, I would say you need to be in 3 names. One is Biocon, one is Cipla, and one is Cadila. So besides these 3, I would see everything else as a reflex rally. Pharma has been in a pronounced downtrend, and if you see Dr. Reddy's or Sun Pharma or other frontline names, they've been falling since 2016. It's a very pronounced downtrend, and even if at all anything happens within the pharma space, it's going to be just a relief rally. But these 3 names that I spoke, Biocon is looking very attractive, and I would have liked it to fall a little further down to somewhere close to 525 before it started rising again. But it's not an ideal world. There's a difference between a textbook world and a real world. So it looks like Biocon might have bottomed, and it's heading for somewhere close to 850 plus. And likewise, Cadila is also looking pretty good. It's also likely to take out record highs, and Cipla is another one which I expect to take record highs if the pharma sector were to recover. But Biocon is the top pick within the pharma space.
Okay, so Biocon remains the top pick, and just pull up the intraday chart of Fortis Healthcare. That's fallen nearly 5 to 6% as we speak, and if I'm not mistaken, it's at day's low. The fall has just come in the last 15 to 20 minutes of trade for Fortis Healthcare. Start of the show, we highlighted PC Jewelers for you. It was down 2 to 3%, and now the counter is down nearly almost 5% lower. So it's pretty much indicating that the short positions which were there for the February series, they are getting rolled over for March series now, because we've not seen any short covering rally coming in for PC Jewelers. The counter is down still 6%. Sumeet, if I can come to you on the charts and take a view on PC Jewelers. If somebody was holding shorts here, this is the counter which has fallen the most in this series by almost 42%. Is it the appropriate time to book profits?
I think one can use trailing stop losses because the counter is still looking weak. There is a possibility that some more downside can be seen in PC Jewelers from present levels. I think on downside it has good support at around 310 or 300 levels. So there is a possibility that we might see a fall of around 10 to 15 points from present levels. So if anyone who has taken short positions in PCGOL at high levels, they can hold on their existing sell positions with the trailing stop loss to be placed at around 335 levels. 335 should be the trailing stop loss for short positions, and on downside one can expect targets of around 320, 310 in next 1 or 2 days time horizon. This is purely a short-term trading call.
You know, the Adani Group stocks have moved up in today's session. So not just the large one, which is Adani Port. I think Adani Transmission in the last few minutes of trade has inched up. Adani Enterprises too, if I'm not wrong, was doing okay. But look at Adani Transmission, up about 3% as we speak. So good going there. And another stock that has done well the last couple of trading sessions is Motilal Oswal. After getting clobbered up to 1,100 odd, Motilal Oswal the last couple of days has seen a smooth, steady uptrend. So a bit of a bounce from the lower levels for this one. Jay, do you track any of the Adani quartet or a Motilal Oswal individually?
Yeah, I mean, once we had a conversation regarding Adani Ports and one of the Reliance Group stocks, and I said Adani Ports was the best pick among them, and I was expecting to cross 250, and it did that. And right now, it's looking like the correction in the stock is not done. I think it could drop one more time below the February lows. Once that is done, I think the correction will be complete, and we can look for positioning ourselves for record highs past 250. But until then, I'll be cautious there.
Okay, that's the view on Adani Ports. The counter in the last 1 month has seen cuts of nearly 8%. But let's move ahead and talk about the buzzing stock of the day, which is Indiabulls Real Estate. Nikki Mirchandani joins us with more details on that stock. Nikki, over to you.
Thanks, Ambit, for that. One in Indiabulls Real Estate, the stock is clearly buzzing today and has rose as much as 4.3%. Volumes remain pretty much moderate at 3.7 times its 30-day average volumes. The stock is closely seen testing the support at a 200-day average moving average. The stock has rallied a good 195% for the entire year. The development behind this up move is there has been a block deal. 1.64 crore shares have changed hands, or for that matter 3.4% equity has changed hand at a price of 211.40 per share. Also separately, reports suggest that Blackstone is in talks to acquire 49% stake in office rental business of Indiabulls, which is an ET report. It suggests the deal is expected to be in the range of $600 million, which values the overall portfolio to $1.2 billion. This sale includes landmarks in Mumbai, a building in Gurgaon, and a park in Chennai. Separately, what brokerages have to say for this counter, we have JP Morgan, which is extremely bullish on this counter. It has an overweight rating and suggests a target price of 235. It says that despite the company being a newcomer, it has a better execution skills as compared to most of its peers and has marquee assets on the balance sheet, and some of the approval issues for its key project are now behind the company. Also, the monetization of commercial asset limited, that's one of the companies that remains a key catalyst for this company, which has been guided by the management, will be selling off the minority stake in IBCL. Execution of this will bring down the company's residential balance sheet in net cash position, which would be a great positive for the counter. Back to you guys.
Thanks, Nikki, for bringing all those details with regard to Indiabulls Real Estate. I also want to pull up Apollo Microsystems, and it is a recent listing, but there has been almost a sudden spurt, 15% higher on that counter. And remember, it's gone up on very high volumes. It opened in the red, so from the lows of the day, it's up almost 18%. And the other recent listing, if you could just pull up that, Ambit Enterprises, that too has seen good gains in today's trade. Ambit Enterprises is currently trading around the mark of 5%, and that also opened in the red, but there has been some buying at lower levels on back of high volumes which has come about, and there was some institutional buying for Apollo Microsystem which was seen towards the end of January. Mr. Harihar, have you tracked any of these recent listings? Because we've seen I think Apollo is still below its issue price of 275 or something, but do you see any value in any of these counters?
Amber, yes, because even I was a little surprised. I think it got oversubscribed, the HNI segment, about 520 times or something. So I think there was a huge oversubscription in Amber. But I think that stock, we just did manage to look at it a little bit fundamentally. But I think the stock does look good. It's a very unique niche that they're operating in. The stock does look good. But I'm not too sure whether, because I think the issue price was about 850. So it's about, I think, 45% already higher than the issue price. So I'm not too sure whether it's really value at these levels, because we'll have to wait for the next couple of quarters to really judge that. But, we like the stock fundamentally, but I think to really take a buy call at 40% higher than the issue price, we would probably have to wait for a couple of quarters.
Well, Apollo is actually now above the issue price, if I'm not wrong. Its issue price was 275. It touched that level today. Yeah, so, barring today, so far it was trading below the issue price, but today the stock has gone way beyond the issue price is 275, trading around the mark of 323. All right, those were the new listings, the new recent listings, but it's time for us to head into a short break on Countdown. On the other side, we get you the Fab 4 stocks of the day at 3:15 p.m. We also get you what the dealing rooms are recommending and also some closing strategies from our technical experts. Stay tuned.
बढ़ते समय के साथ बढ़ती सुरक्षा का वादा, LIC की जीवन प्रगति पॉलिसी, जिसमें बीमा की अवधि में हर 5 वर्ष बाद अपने आप जोखिम सुरक्षा की राशि में बढ़ोतरी होती है। LIC की जीवन प्रगति पॉलिसी।
सॉरी, आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
दुबे जी मुंबई की बारिश देखने का शौक लेकर आए और लैंड करते ही फिसल गए। अब शहर में नए थे और इनके पास नो जोनल कोपे वाला ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस तो था नहीं।
हाँ, अब कहा करें, हमारे शहर का बीमा का था 60,000 और यहाँ का खर्चा है 90,000। वापसी के पैसे भी नहीं बचे, जो था सब इस घुटने में घुस गया।
कौन घुसा?
आ गई।
कहाँ बोल रहे हो? कहाँ घुसे तुम? हेलो? अरे हेलो?
बड़ा शहर, बड़े खर्चे।
कितनी बार बोल रहे, हमारी बात तो पूरी किया करो, तुम पूरी सुनते ही नहीं, सवाल जवाब कर रहे हैं, समझ में नहीं आ रहा है, बस हो गया, अब तुम आ जाओ भाग के यहाँ पर।
क्या बात कर रही हो भगवान, भाग के?
अरे तुम, हम बोल रहे हैं तुम आ यहाँ पर।
दौड़ के कैसे वापस आ जाएं, घुटना टूट गया है।
क्या बोले?
अब जाओ और वो FD तोड़ो।
बड़े शहर के खर्चे की टेंशन नहीं, इंश्योरेंस लीजिए। ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस देता है हेल्थ कवर के साथ नो जोनल कोपे का बेनिफिट, ताकि आप अगर दूसरे शहर में भी हों तो आपके ट्रीटमेंट में कोई कमी ना हो। ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस, टेंशन नहीं, इंश्योरेंस लीजिए।
White shirts, कितने प्लेन और सिंपल. फॉग सेंट, प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल. फॉग सेंट, न्यू फैशन वेयर फॉर मेन.
Welcome back. You're still watching Countdown with us, and some recovery seen in the markets last half an hour of trade. Expiry day, there is some volatility, short covering rally we were expecting. Bank Nifty's turned green now, 24,946. And remember, Bank Nifty did underperform for this series, so probably you're seeing some bit of short covering rally which is coming about. And Nifty is also currently trading with cuts of 9%. 10,390 is the mark where Nifty trades, so it's off day's low completely as we speak. But which are the Fab 4 stocks that Yash Upadhyay is tracking today. Let's go across to him and find out. Yash, over to you.
Good afternoon, Navneet. So MTNL had gained close to 14% today on the back of reports that the government would be announcing a revival plan for the state-owned telecom operator, which includes a strategic alliance with BSNL. KPR Mills is up about 3.5–4% after the board of directors approved the proposal to buy back some 13.5 lakh shares, about 1.8% equity at a price of about 810 rupees per share for a total consideration of about 108 crore rupees. Also, Britannia, we are looking at, is up about 1.5% after Credit Suisse initiated with an outperform rating on the stock and have set a target price of about 5,550. Now, they believe Britannia is well positioned to consistently gain market share, which could increase to high 30s going forward, while margins too could see an expansion starting from FY19. And finally, IDBI Bank is up 6%, while most PSU banks have been taking a beating post the whole PNB fraud. This one is gaining for a fourth straight day and is in fact up almost 20% in that period, with volumes too coming in significantly higher, almost 4.5–5 times the 20-day average. Back to you guys.
Thanks for that, Navneet. Thanks for that. What am I doing with your name these days, Yash? I don't know. But thanks for that, for joining in today and giving us that perspective. Hari, my last question, and that is on a company like Britannia, wherein it's not cheap by any stretch of imagination, but if there is one commentary that has been positive, is this whole consumer space and rural consumer commentary. Though Britannia, I could argue, caters more to the urban consumer as well. But fairly bullish brokerage notes out there too. Are you in the bullish camp?
Yes, in fact, as far as the entire FMCG pack is concerned, we continue to be bullish. But as you rightly said, we do see stocks like Hindustan Unilever benefiting a lot more from this consumption / rural consumption story compared to Britannia. But having said that, I think for stocks like these, I don't think valuations really matter, whether it's 45 or 50 times earnings. They don't really matter because, if you're looking at a 20–25% upside, then you're not really going to get worried about whether the valuation is 40 or 45 times. So I don't think valuations really matter. And I think there have been a couple of upgrades of late, so that's probably also working in favor of the sentiments. It's hard to get a multi-bagger in stock like these, but yeah, definitely if you're looking at 20%, 25% returns per year, I would believe you can easily get that in stocks like a Britannia or even a Lever.
You think a 25% growth in Lever for the next 2–3 years is possible?
I would believe that Lever should at least give a return of 25 to 30% consistently the next 5 years. On a very conservative basis, it could be much more than that.
Wow.
The other one which is doing well in the same pack is GSK Consumer. That's gone up in today's session. Well, I don't know if there's any news or anything, but one of the articles definitely states that they're looking at expanding their product portfolio and venturing into protein-related products. Any view on GSK Consumer?
There have also been talks about a buyback, because I think probably the parent is trying to do a buyback before 31st of March, because I think post 31st of March there is going to be a lot of capital gains implications, etc., especially for those who have not bought it in the market paying STD. So I think that's more of a news that is floating around for most of these what I call the MNC names. So I think that's probably keeping it up. But yes, as I said, consumer space does look quite attractive at these levels. And let's not forget that 35% of your index is banks, and there is a big question mark now over banks. People are getting a little scared about banks. So probably I think a little bit of safe money is getting into IT. Why is IT going up? I don't see any logic other than that a little bit of money is getting parked in IT, a little bit in FMCG. So I think it's a bit of safe money getting into these segments.
Okay. Hari, fair call. Great having you. Thank you so much for taking the time out and joining us.
Thank you.
And giving us that perspective. Okay. As we speak, just trying to see if stocks are moving up. Just pull up L&T and see what that is doing in the session today. I think inching up. The index, being very volatile, has moved back into the green, and a clutch of names might be leading that as well. But just look at the Nifty Bank, the intraday out there. It's been yo-yoing in the last 1 hour of trade. But there you can see the choppiness. It came off, went up, came down again, and now breaking into the green. So good going for the Nifty Bank. I know Mayuresh Joshi is there, but I just want to get a quick perspective on the trade on the Nifty Bank from Jai Bala. Jai, are you looking at trading the Nifty Bank? It's very choppy, very volatile, or would you trade it?
Yeah, see, 24,600 on the bank Nifty is a very important support, and that's the reason why you're seeing that this bounce happen. The market clocked a low of 24,700 and change today, so it's natural that it should see a bounce. But in my opinion, it could be a 50-50. I would rather avoid it. And if the way to play the bank index is to have a rupee neutral strategy, you can go long on Bank of Baroda and short on PNB. That way you'll be rupee neutral and you have an exposure to the sector. And if there is any bounce, I'm sure Bank of Baroda is likely to outperform PNB. So that's the kind of way you play. Or you play the private sector. But even there, I don't think the gains are going to be much bigger. But given that the broader index is struggling between 10,500 and 10,300, I think the laggard is the banking index. So that being the case, you either be neutral out there or don't have an exposure there.
Jay, before I let you go, the other banking stock, surprisingly, which is outperformed this week is IDBI Bank. It's up for the fourth straight session today. Somewhere about 5 to 6% gains have been seen so far, almost at day's high. Is there any trade that you see on IDBI Bank around the levels of 74?
No, I think it's basically a relief rally. I think it's a strong downtrend. So basically, what we are seeing is a relief rally for the medium term downtick that it's seen for the several months. So I wouldn't, at best it could be a BTST trade. So at 74, I think it could probably go up for one more day. But I don't see a major uptrend catching on for the stock, and I would just treat this as a short-term uptrend.
Okay, Jay, we'll leave it at that. Thanks much for taking the time out and joining us and giving us your thoughts and ideas. By the way, M&M is in the green, which is not a bad sign. It's up about a couple of percentage points after having days and days of a correction. But on cue to talk about all of that and more is Mayuresh Joshi, fund manager at Angel Broking, joins us right now on the show. Mayuresh, thanks so much for being patient with us. Had to do a couple of chats. Mayuresh, what's your favorite mid-cap IT name? As I look at or scan the pockets of trade which are doing rather well on an expiry date, it's almost impossible to talk about what the index could do. But specific pockets, mid-cap IT, that one telling index or group of stocks which are doing well. What do you like here?
Afternoon, Neeraj. So again, you'll have to excuse me for my voice. But a large element of mid-cap IT that we probably liked at lower levels was obviously Cyient and Mindtree. Again, good set of numbers by both these companies. But I think the dark horse candidate, as we have discussed earlier as well, is, in my opinion, Nucleus Software. Now, the typical story behind Nucleus Software is its financial suites called Neo. And that suite has been doing exceedingly well, specifically in the NBFC space. Now, a lot of capex has actually gone into the development of this product and other digital products that the company is foraying into. And a large part of that capex element is largely behind them. As IoT, cloud computing, and the necessity of having more licenses towards the NBFC space accelerates at a very fast clip over the next few quarters and years, I think this company is in a very, very sweet spot. The second element in terms of their cash on books and the free cash from operations, I think can have a tremendous earnings compounded growth rate over the next few years. And if one looks at the market cap at this point of time and I look at the intrinsic value of future cash flows, I think it can be far higher in terms of what the actual market cap should be, with the projections of numbers coming through, specifically in terms of the licenses for the new suite platform on the NBFC front. From a valuation perspective, it's not too expensive even at the current juncture. So I think my best candidate at this point of time can be Nucleus Software on any significant decline.
In fact, Jay Bala also had a call on Nucleus Software on technical terms. But as we speak, just two private banking stocks which are Nifty constituents, which are almost at days. I want to pull up IndusInd Bank as well as Kotak Mahindra Bank. They may have come off days high, but there was some bit of spike which was seen. IndusInd is currently trading with gains of nearly 2%, and ICICI Bank will also come up on your screen. Sumeet, I want to come to you on the chart. Any trade that you see for all the three private banking stocks that I just highlighted, Kotak, IndusInd or ICICI Bank?
See, Kotak, we have already given a buy call. We feel that Kotak can give a good move from present levels. Kotak is looking good on charts. We have given a buy call with a target of 1100 and 1120 levels in next couple of days. Also, ICICI Bank is looking good to me. I think one can initiate long positions in the ICICI Bank at current market price. There is a possibility that from here on we can see a good upside move in which we can see targets of around 335 as an immediate target, and if 335 is taken away, then we can see extended move till 350 levels. So for a trading perspective as well as for a medium term perspective, one can initiate long positions in the ICICI Bank at CMP for the upside target of 335 and 350 levels.
I wonder if you can pull up the stock price of First Source, that's trading at 52-week highs, and in line with the other mid-cap IT companies has done well, but a bit of a spurt that is coming in the last few minutes of trade, and which is why I thought we should highlight that. Mayuresh, say the Halol resolution is positive for Sun Pharma. What would you do with Sun Pharma Advanced Research? A couple of their products are also through that plant only. Is there a fundamental case to buy into a Sun Pharma Advanced Research? People will talk about Sun Pharma, yes. What about Spark?
It could be a possibility, Neeraj. And again, I think the kind of developmental stages product that Spark probably has at this point of time, again, let's be very clear, these are very long gestation products. So I think it does take time for these products to actually get converted into a cash conversion kind of a flow. On the other hand, again, I think if the Halol facility does come through, I think the biggest beneficiary obviously is going to be Sun Pharma, because the kind of pipeline of ANDAs that can actually come through from the Halol plant, and specifically the specialty chemical molecules, I think that can have a significant turnaround in terms of the earnings estimates for these companies. So my sense is that yes, both of them can do well. Sun Pharma, in my opinion, can react even stronger, because the earnings momentum can then start catching up on an accelerated basis, specifically from an FY19 perspective. But I think it's an event risk that we are probably looking at. So let's see what the Halol inspection actually brings to the table.
Okay. Well, that will be the topic of conversation tomorrow for sure. But as we wait for that, the last 15 minutes of trade, last 15 minutes of the February expiry, it was a short one, and looks like it will end marginally in the green. At least for the day today, it could end marginally in the green. The Nifty Bank showing signs of that. But time to tell you what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, good afternoon, Neeraj. One of the stocks that's been spoken about today is KPIT Tech. It's doing well for itself, but dealers do indicate that it's up almost 0.5%. Dealers indicate some of the domestic mutual funds are looking to accumulate the counter. They have buy orders at lower levels. The next one is Aurobindo Pharma, and the much awaited US FDA inspection verdict could come in any time. The general sense that dealing rooms have at this point of time is that obviously there could be some observations that will come in because it's an injectable unit, but overall they don't see any kind of major concern on the observations by the US FDA. So Aurobindo Pharma is on the radar. And Jain Irrigation had rallied significantly but has cooled off. Some of the HNIs who had actively taken positions over the past few months, they are actively squaring off their positions in Jain Irrigation. But Yatin, what are you hearing?
IDBI Bank, that is the stock we have been speaking about, and that is also bucking the trend in the future and options segment and the PSU bank index. So clearly IDBI Bank dealers recommend BTST based on FNO trend. So buy today, sell tomorrow is the kind of strategy dealers are recommending. Indiabulls Real Estate, that is one stock which saw large 1.5 crore shares block deal in trade today, and marquee funds and HNIs are said to be buyers in trade. So that is one stock which is again quite active in trade today. And one more stock from the real estate space, Oberoi Real Estate, and that is one stock wherein HNIs have been said to be selective buyers at low levels.
2.5% or 3% higher for Oberoi Realty in the session today as well. Thanks for that, Yatin as well as Darshan. Biocon is surging ahead, 7.5% higher now. Mayuresh, we were just talking about it the other day. It's currently amongst the top gainers on the Nifty 500. What explains this? Yesterday the news, while not too damaging, wasn't the best. It's just come back, roaring back, has Biocon.
No, so to a large element, Neeraj, I think the news which came through on the Malaysian facility, I think the facility has not even started having any accretive revenues come through. So in a large bit, I think over the next few quarters, as approvals start coming through, I think they will obviously have a resolution plan adopted for their core businesses and the approvals that they've got for the recurring drugs, which is Clargin. You're probably looking at Trastuzumab, Pegfilgrastim. I think these drugs are multi-bagger drugs, and FY20 should be an inflection point. So the valuations might look steep. I think we remain extremely positive over the next 2 to 3 years on this stock.
Okay, that's the view in Biocon, a counter which is bucking the trend. In fact, in the last 12 months as well, the counter has given you returns of nearly 60 to 70%. Mayuresh, just want to check if you track something like EIH associated. It was locked in upper circuit yesterday, and today also it's seen gains of nearly 10%.
So as we were discussing a few weeks back, I think a few of these hotel stocks are expected to do well because on the count of arrivals coming through, specifically in terms of inbound travel, as well as the domestic travel going at a very compounded pace. The second element, which obviously is going to be a very key factor for hotel stocks, is going to be the utilization levels exceeding 70-odd%. As soon as it crosses that threshold, I think the operating leverage becomes so huge for these hotel players that everything starts trickling down directly to the bottom line, and that accelerates their earnings growth. So my own sense is that looking at the industry components at this point of time, specifically I think the unorganized players, and the unorganized players probably having a larger say over the next few years as more value migration happens towards these players. I think the utilization level threshold of 70 will be crossed, and therefore it makes a compelling case in terms of long-term investing. Do valuations look expensive? Absolutely yes, at least from the next year's perspective. But again, as I said, if you got a 2 to 3 year horizon, yes, I think stocks like Indian Hotels, EIH should relatively do better over that time period.
Okay, that's the view on the hotel pack. Let's just revisit the markets. We're just flat. Bank Nifty is trading with gains of 16 points. Nifty is somewhere about levels of 10,381. Pull up Siemens, that counter has seen a correction in the last half an hour of trade. It's trading with cuts of nearly 4.5% as we speak, almost at day's low 1189. Sumeet, on the charts, would you initiate a fresh shot here?
Which stock you're talking about?
Siemens.
Well, yes, on Siemens, there is a possibility that we might see a fall till 1150 or 1130 levels. Stock has given a good move from higher levels. That means from the levels of 1240, we have seen a fall of around almost 60 points. Now, immediately, yes, there is a possibility that we might see fall till 1130 levels. For a trading perspective, those who have taken short positions at higher levels, they can hold on the existing positions. And if anyone wants to initiate a fresh short, then can initiate at the current market price also. And if there is a pullback of around 10 to 15 points from present levels, then that should be used as a selling opportunity for the downside target of 1150 and 1130 levels.
Okay, 320, let's get in a closing strategy. So while we've gotten some bits of ideas as well, I'm just wondering at the mid-cap end of the market, Sumit, do you have a BTST or STBT?
See, Coromandel is looking good to me. Coromandel has given a good move today from lower levels. Now it's quoting at around 517, 518 levels. One can initiate long positions in Coromandel at the current market price with a small stop loss to be placed at around 505 levels for the upside target of 530, 540 levels in next couple of days. It's looking good on charts. One can initiate long positions.
Interesting. Coromandel. Mayuresh, this whole DBT scheme benefit and the big relief that it will cause for all parties involved, it started off playing out well, but are companies like Coromandel already factoring that in the price?
To a large bit, yes. But again, I think this is one stock that I've liked in the past. We have discussed this. I continue liking this on two counts. If you look at the inventory levels for a lot of these fertilizer companies, I think the inventory levels have come down drastically. And then you do the second comparison in terms of the import pricing parity. I think the import prices are way higher at this point of time. So it just doesn't make sense in terms of having these fertilizers imported at the landed cost and then probably add freight and logistic expenses to that to take it to the hinterland. The third element in terms of DBT, as you pointed out, to a large bit, I think the stocks have factored that in. And what kind of changes it actually brings about, I think will be an interesting facet to watch out for over the next few quarters. But what it does is it brings down their subsidy receivables to a great extent. And to that extent, I think the working capital constraints that these companies face come down, increasing and improving their cash flows. So yes, I think something like a Coromandel is something that I've liked in the past. I'll continue to like that going ahead as well.
The ROC has gotten into the act. They are seeking some information from Fortis. Those were the flashes on your screen. I don't think it has a material impact on the stock in any way, but just pointing out that's what the ROC has said. Fortis as a stock has been down in the session today, down another 6% at 146. I think we know Mayuresh's view out here. He's been pretty candid about it. that let's not go out and buy Fortis. Enough and more stocks available right now at a good price, likely to be available at a good price over a period of time as well. I think the key point out here to remember is that there is no need for people to be in a hurry to go out and buy stocks if they fall, because the market doesn't seem like it is going to be running away on the upside, and therefore what you want to buy will probably come to you. No need to necessarily go out and pay top dollar for any company. I'm not referring to Fortis alone, almost talking about any other name. So just be careful when you are initiating those buy positions as well. Sun Pharma is ending the day at the day's high though, 543 and counting, 3.5. I'll not ask though for a technical trade here. It's an event-based stock. You don't know what would be happening in tomorrow's session. Yesterday it was down to 515 or 520. Today it's ending at the day's high. So fairly volatile, fairly choppy. Let's wait and watch what happens there. A stock that's doing well is Adani Ports, up about 2.5%. And Mahindra is off the slumber that it has been for the past few days. 2.5% higher at 724. A bit of a bounce back here, Sumeet. Would you trade M&M?
See, M&M counter is looking good to me for a medium term and longer term time horizon. Stock has given a good move from lower levels today. It has just tested the 200 DMA. And from there, we are seeing a bounce back in the prices. Now, it seems that the stock has taken support at around 700 levels. So, for a short-term trading perspective, 700 is the bottom for the stock. And from here on, if the stock is able to break 730 on closing basis, and if we are able to see closing trade, if we are able to see M&M trading over 730 for next 1 or 2 days, then there is a possibility that we might see a one-side move till 770 or 780 levels. M&M looks good to me. I think one can initiate long positions in M&M at the current market price.
Well, the other stock which has moved higher is Reliance Naval, which is also in the futures and options market, so 6.5% higher there. And IT Tech is also trading with gains of nearly 4%, and it's also turned out to be a good day for stocks like Repco Home, that's trading around the mark of 540, and Apollo Hospitals, which was under pressure. Repco is actually trading almost a day's high, and Apollo Hospital has also seen some recovery. That's around the day's high mark now, 3% higher for Apollo Hospital. Mayuresh, I don't know if we spoke about the PSU banking space till now, but how should one approach now at these levels, considering there is so much of correction that has taken place? Let's say if an investor already had PSU stocks in the portfolio, what should they do? And does it offer a fresh opportunity to anyone to enter at these levels?
So I think for some stocks, I think invariably you're stuck. So unless you're a long-term investor, it doesn't make sense. The second element within the entire PSU pack is the larger tier names and the smaller, that is the mid and the small cap PSU banks. So I think investors should probably stay away from the mid and small cap, because even for the large caps, what is probably going to happen, at least for the next 2 to 3 quarters, is elevated provisioning from standard assets, from the NCLT cases, the recent case that we're probably seeing, and the new NPA norms. What it does, it balloons their credit cost significantly. And since credit growth probably stays at constrained levels, I think the kind of leverage that one really expects to come through in terms of return ratios just doesn't happen. Having said that, I think the pain might very well continue. They might actually go out in a price and time correction. So for the next few weeks, my own sense is that State Bank of India, though it gave a howler set of numbers in terms of fresh slippages, in terms of the pipeline that it probably has, both in terms of the watch list, as well as the kind of provisioning that it will require to do for all these cases, my own sense is that the next few quarters should actually start improving for a bank of the size of State Bank with good capital adequacy, a retail reach and operating leverage. So over the next few weeks, I think in a very staggered way, State Bank is something that I probably like from a long-term perspective. But the larger tier names, I think the investors, if they're holding on, I think they should probably have the patience to probably hold on to these stocks. Because the next few quarters might be tough, but as things start improving, I think the leverage should start playing on their balance sheets compared to the mid and the small cap PSUs.
Okay, that's the view in the PSU banking space. Some bit of recovery definitely has been seen in the last 2 trading sessions, at least for these PSU banks. But let's head across to Neeraj to find out how exactly the closing today is panning out on this all-crucial expiry day. Neeraj, off day is low, so not bad, but can't take away. February series was not at all great for the markets.
It almost seems like yesterday was the expiry day and today was pretty much nothing. But yeah, you're right. These numbers look okay, but a horrible series, 5 or 6% off for almost all of the key benchmark indices. But in today's session, flat, I think flat for the mid caps and the small caps as well. We haven't really had too much of a dramatic move. 0.5% or thereabouts is a flattish kind of a move that we're seeing at the broader end of the spectrum too. The market breadth not the most positive. What's moving? Sun Pharma ending at the day's high is 4% higher. Adani Port doing okay. M&M showing a bit of a bounce and some bit of traction in the non-heavyweight private banks, IndusInd, and yes, the Kotak Bank too about 1.5% higher, which is actually not a bad thing. But the HDFC twins are missing from the winning list, as is Reliance Industries. What's doing poorly though? ONGC, Maruti continues to grind lower, Tata Motors continues to fall. So it's not been a great last 3 months for the auto majors. Reliance is in the red, ITC is in the red, HDFC Bank is in the red. So there are a few heavyweights which are flattish to marginally in the red. And HDFC brings up the list of losers, but actually it's just about flat with 0.01%. So not making any kind of a meaningful move in today's session is HDFC. What about the mid-cap end, Naveen?
Well, a mixed day for the broader markets, Neeraj, because there were gainers and you had losers also. Let me start off with the gainers. EIH Associated, a hotel company which was locked in upper circuit with 20% gains yesterday, was up another 10% in today's session. Clearly, there is some fresh buying which has emerged into this counter. The recent listings, Apollo Micro as well as Amber Enterprises, both of them saw good gains. In fact, specifically for Apollo Micro, which so far was trading below its issue price of 275, finally climbed above that mark today, closing the day around the day's higher levels with 13% gains. And Amber Enterprises also saw gains of 5%. Well, the ID pack has been supporting this market all through the series, and today also you had stock like Nuclear Software, which had a great day, 5.5% higher for Nuclear Software. IDBI Bank, that specifically has had a great week. So far for the week, IDBI Bank is up nearly 19 to 20%, and for today it was up nearly 4.5%. And what a day for Biocon, one of the top gainers as an F&O security as well. Ending at day's high is always a positive sign. So 8% higher for Biocon around the mark of 626. Let me start off with the losers now. Fortis Healthcare came under pressure. We did see some bit of recovery coming in for this stock when it was trading around the mark of 155. But once again, at higher levels, there seemed to be some selling pressure which comes about for this counter, closing the day at day's low. PC Jewelers, the top loser for the February series, down almost 40%. On last day also, it could not see any sort of short covering rally, down 5.5%, telling you the short positions were rolled over for the March series. Wakrangi was locked in lower circuit once again in today's trade, so that counter remains in focus. And lastly, Siemens, that came under pressure just towards the last hour of trade. Siemens and F&O stock closed at day's low levels with cuts of over 4%.
And that brings us to the end of this expiry. It's been, well, as we've stated, a terrible expiry, but just today's session, a flattish close, even for the Nifty Bank, a flattish close marginally in the green. The turnover should come up on your screen. We all know that the F&O turnover would be high. The question mark is whether the cash market turnover looks okay. Yeah, well, the F&O turnover too, very close to those. I think we've seen higher levels, slightly higher than this, if I'm not wrong. The cash market turnover picking up in the session today. That's interesting. After a few days, a brief hiatus of sorts, back to about 35,000 odd crores. So not bad there. Advanced decline, I would believe in favor of the declines. The mid caps and the small caps didn't show too much of a bounce back. In fact, the breadth only widened. So comfortably 1:2 in favor of the declines. And the heat map will show that there's a fair bit of red on the screen. We've already established that, except for Sun Pharma and a few other stocks. Yeah, there it goes. Fair bit of red on the screen, except for Sun Pharma and a few other stocks. We've had more stocks in the red today. But suffice to say, a disappointing series, Navi.
Oh yes, it has been. I think Nifty's lost 690 to 700 points for this series. I don't remember seeing these kind of cuts, at least in the recent past. We gained almost 550 or thereabouts in Jan, and for the year now we're almost in red. Not almost, we are in red.
We are in the red. Yeah, let's see how it goes going ahead. Mayuresh, what should the buyer's template be currently? Pause, sit on the sidelines, wait for the prices to come, or selective opportunities can afford to be aggressive too?
I think you need to be a little bit more selective at this point of time, and though we are not ruling out further corrections in the market, I think it's very difficult to time where the bottom of the market will be and when that bottom will be. So I think in a staggered way, on any declines, I think some small proportions can be put in, I think the obvious bias here, Neeraj, is going to be towards qualitative names. So I think investors should have qualitative names within the large cap or the mid cap universe. And again, I think certain stocks where a lot of froth has built up within the small cap universe and where earnings probably are not supportive, both of the valuations and the price at which they are ruling, I think it still makes prudent sense to probably get out of these stocks and start buying these qualitative large and mid cap names in a staggered manner.
Sumeet, closing thoughts from you. Tomorrow will be the start of March series. If I look at the options data, it is indicating a range of almost 1,000 points. How would you approach the index on day one of the new series?
See, earlier also I've said that at present Nifty is looking in a range. 10,300 is support levels for Nifty, and on high side 10,500 is a resistance. Either side breakout, we will see a good move in the index. What I can sense looking at the chart is that till that time 10,300 is not taken away, it's better to be on buy side. We feel that in next couple of days we will see upside breakout. So for a trading perspective from here on, one should initiate long positions in the Nifty for the upside target of 10,450, 10,500 levels in next 1 or 2 days. And if the Nifty is able to break 10,500 on closing basis, then we will see a fresh range on higher side. That means 10,700, 10,800 levels for the next 10 to 15 days time horizon. Now immediately one should be on buy side till the time 10,300 levels are not taken away.
All right, Sumeet as well as Mayuresh, appreciate both of you joining today and taking us through your views in the markets. But it's time for us to slip into a quick break. We'll be back with exclusive views from Kenneth Andrade of Old Bridge Capital and Vikram Limai of NSC. Stay tuned.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. जिंदगी के साथ भी, जिंदगी के बाद भी.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
मीट मिसेस मेहता. इन्होंने नो रूम रेंट कैपिंग वाला ICICI लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस नहीं लिया और जा पहुंची ब्रोकर बबलू के बिल्कुल बराबर में.
बर्बाद कर इसके. ए स्टील का बेच जल्दी जल्दी. मैं इधर ने हरणिया का इलाज कराने आया हूँ. अगर तूने ये शेयर नहीं बेचा ने तो मेरे को बाईपास कराना पड़ेगा. हमें अरे स्टील आउट. सीमेंट ये पेमेंट नहीं हमें सीमेंट डूबा. ब्रोकर किसने बनाया हमें? अरे तेरे को
रूम शेयरिंग की टेंशन नहीं, इंश्योरेंस लीजिए। आईसीआईसीआई लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस देता है हेल्थ कवर के साथ साथ नो रूम रेंट कैपिंग का बेनिफिट भी, ताकि आपको मिले अपनी मर्जी का रूम और सुकून। आईसीआईसीआई लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस, टेंशन नहीं, इंश्योरेंस लीजिए।
वाइट शर्ट्स कितने प्लेन और सिंपल। फॉग सेंट प्लेन और सिंपल वाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
Welcome back. You're still watching Countdown with us. Well, the aim is to not reduce the number of products, but to bring back volumes to NSE, says the MD and CEO of NSE, Vikram Limai. Speaking to Bloomberg Quint's Ridhima Saxena, Limai says Indian exchanges are doing all they can help to investors ease into moving to new products that will be offered by domestic institutions. Listen in.
I have no idea on how long it would take. The SGX licensing arrangement that we have has a notice period of 6 months. So that is when the SGX Nifty license will terminate, which is in August. People can trade India even today if they want to onshore. And obviously Gift City is an operating exchange. If they want to trade Nifty contract on Gift City, that is also offered and available. So I think there are alternatives available for people. We are in discussions with investors to try and make sure that the transition is orderly and it's not disruptive for anyone. And so from that perspective, all the exchanges will do whatever they can to facilitate an orderly transition.
Also, sir, did you see any impact on the Indian markets, considering that there was some increase in the F&O trade? Has there been an impact that has been seen so far, now that the SGX Nifty licensing may get cancelled by August?
No, not really. At this point in time, there isn't any kind of material increase in volume in the Indian exchanges that you can attribute to this particular development.
What are your expectations? By how much do you see this volume going up by, considering that we have in fact taken a move like this?
It's very hard to tell. I mean, I can't comment on how much volumes would increase in India and what kind of liquidity would flow back, etc. I can't give you a number on that, but the expectation is that some liquidity would move back to India, some liquidity might move to Gift City, some liquidity might just disappear, because there are some people who have been trading in other jurisdictions who may choose not to trade India. So it could be a combination of all that. It's very hard for me to give you a number.
Also, sir, one last question. This was more of a hedging for a lot of investors, a way of hedging for a lot of investors. Now, although they may have to move to Gift City, where they can still trade in dollar denominations, but how do you see the impact on those investors, and what do you see can happen there, to kind of assuage their concerns?
Like I said, there is a hedging mechanism that's available. Certainly, the SGX Nifty will continue for 6 months. So it's not that people are not going to be able to trade the Nifty futures in Singapore for 6 months. So within that time frame, there are alternative hedging mechanisms that are available. You can hedge in India as well. There is an onshore Nifty contract available that is very liquid. And there is a Nifty futures contract available in Gift as well. So investors can hedge their India positions through alternatives.
Would you be able to tell us what kind of products that may come out of the Nifty family at SGX Nifty?
No. SGX Nifty will get terminated in August, right?
Absolutely.
So
they are planning to launch some products.
So I can't comment on. That is SGX's plan, and I have no idea what an alternative product would be. All I can say is that any kind of alternative product to trade based on Indian securities will require prices from Indian exchanges. Yes. And that we have said in our press release quite clearly, that prices cannot be there is an end-use restriction on data, where data cannot be used for trading an offshore derivatives contract. So any kind of product that gets developed on an Indian security will require data from Indian exchanges, and so I'm not sure what that product would be.
There is an acute shortage of carbon black in the country, hampering the production in the country, say tire makers. The reason, they say, is the high anti-dumping duty imposed on imports from Russia and China. Yash Upadhyay, who's filed this story on our website, www.bloombergquint.com, joins us right now with the details. Yash, how large is the shortfall?
So basically, Neeraj, what's happened is that industry body ATMA, they've said to the government that there has been a severe shortage of carbon black, which is a raw material used as a reinforcing agent in tires, and because of which a lot of factories and MSMEs are bearing the brunt and having to shut down their operations. So we spoke with Rajiv Buddharaja, the Director General of ATMA, and according to him, the current production of carbon black for FY18 is estimated to be at about 840,000 kilotons, while the domestic requirements is pegged at about 900,000 kilotons, which is indicating a shortfall about 60,000 kilotons. Of this, the domestic manufacturers supply close to 100,000 to 120,000 kilotons to their overseas clients, which indicates a further deficit in the requirement for this raw material, taking it to about 180,000 kilotons, which stands at about 20% of the total production. But adding to the imports that stand at about 90,000 to 1 lakh kilotons, the total number comes down to about 80,000 kilotons. So to address this issue, basically, they've asked the government to reduce the import duty on carbon black. So India levies import duty on China and Russia. However, on Russia, the import duty stands at about $36 per metric ton. For China, it's almost 10 times of that, at almost $400 per metric ton. And going forward, we are also expecting a significant increase in the demand for this raw material, because as we've seen in the Q3 volumes for some of these tire companies like Apollo, Seat and Balkrishna, they've reported a healthy double-digit growth in volumes, mainly on account of the rising replacement demand and also the imposition of anti-dumping duty on the Chinese TBR tires. So even to worsen this situation further, some of these domestic manufacturers, they have kind of taken a shift in the production trend. They are moving to a specialty carbon black product, which is a niche sub-segment in the carbon black industry. And the carbon black product is basically divided into rubber and non-rubber segment. And this specialty carbon black has application in the non-rubber segment for coatings, printing and for polymers. So basically this too will create a significant gap. And the reason behind this being is that the specialty carbon black commands almost 2 times the realizations of the normal rubber carbon, and also the margins on this product are also significantly high, almost 4 to 5 times the normal rubber carbon. Back to you.
Thanks, Yash, for bringing all those details. And obviously, you can read the full report on the, of what Yash just highlighted about the anti-dumping duty prompt tire makers to call for export ban on carbon black on our website, www.bloombergquint.com. Okay, let's move away and talk about the European markets, which are not doing that great. In fact, we've seen deep cuts coming for all the 3 benchmark indices there on your screen. CAC down 0.5%, DAX is trading almost with cuts of 1%, and so is the case for the UK market. FTSE 100 is also seeing cuts of nearly 1%. Let's head across to Bree Taylor, who joins us from the London studio with the complete lowdown of the equity action witnessed there. Hi, Bree.
Hello. And so global stocks really are taking a leg down today, as you just mentioned. And this is in the wake of the Federal Reserve minutes that painted a healthy picture of the U.S. economy and raised the prospect of tighter monetary policy. Now, the Stocks Europe 600 index is being dragged down by miners today, with Anglo-American being the biggest loser, trading down almost 4% after its adjusted earnings per share for the full year missed the average analyst estimate. But one of the Stocks 600's biggest winners has been Barclays, which reported fourth quarter earnings this morning. The UK bank says it will raise its dividend this year and would consider buying back shares for the first time in more than 20 years. Now, Barclays shares have been surging this morning as high as 6.4%. They are now trading up around 5%. We're also watching U.S. futures, which are pointing lower, and the dollar is unchanged after yesterday's Fed minutes that I just mentioned. And U.S. oil is falling as well, trading just above $61 a barrel, and gold also down, falling for the 5th day. So that's a quick wrap up of what's happening around the markets. Back to you.
Thanks, Bree, for bringing all the details with regard to what's happening in the European markets. Well, let's switch focus back to Indian markets, and Kenneth Andrade believes Indian markets could correct another 5 to 10% from here on. While the founder and chief investment officer of Old Bridge Capital says it also provides the best opportunity to distinguish between the weak and the strong companies. Listen in.
The markets trade at about 20 times, 22 times earnings, right? Now we got to fathom that what are we buying at this price point. Now I can reduce that to a stock also, but when you're buying stock at 20 to 22 times, somewhere in that region, my sense is, or the way we look at it is how does this environment actually grow profitability to justify me buying current valuations cheap. Okay, corporate India has to double profitability in the next 4 to 5 years for me to justify that number. Can this actually happen? And in large pockets of the environment right now, you find the probability of that happening very real. Okay, so we've taken data out on financials separately, and we've taken data out on manufacturing and services, etc., separately. The data on the other end, which is manufacturing, services, etc. In terms of capacity utilization, this number this is March end 17, where all balance sheets were available. This data reads at a capacity utilization of close to about 70%. Now, if there's no new supply coming in, that 70% is going to move to 80% and 85%, right, over the next 4 years. If there's going to be a linear growth in that demand, which is 4 and 5%, and unless India hits a minefield, okay, you will get an 85% capacity utilization there, and then some part of the environment gets pricing. So you get a reasonable rate of growth into the next 3 or 4 years, and then you get a non-linear growth because every incremental pricing power that the industry has translates straight to bottom line because there's no incremental cost involved. Okay, and that's the canvas that we're actually laying out. Okay. As long as there's no capex in the cycle, we are fine. Okay, and capex is not necessarily linked to growth.
True.
Okay, so that's how we think the progression is. So coming back again, I think by the time we reach that full capacity utilization, corporate India should double profitability from where we are. And this is, I'm keeping the financials out of it.
Yeah, sure. We're talking manufacturing.
Yes, manufacturing, services, etc. Okay, and year ended 2017, we made these subset of companies, which is part of the BSE 500, made about 4 lakh crores of profitability. If that shifts to 8 lakh crores by 2020, 21, 22, I think we're in a reasonably safe zone. And remember, all of this will come with no incremental addition to the denominator, which is your capital employed, which effectively means that you're going to get capital efficiency much higher than you've seen it in the past.
Yeah, and that's a great kicker for valuation multiples to relate to, I would presume.
So let's put it this way again. I go back. I do not want to comment on the numerator, which is the market, which is the price. What I'm focused on is whether this new denominator will get achieved.
Okay. The numerator will take care of itself.
The numerator will take care of itself.
Okay. So what within this bucket, manufacturing and services? Now, the reason I ask this again, because the last time that we spoke on Alpha Moguls, you mentioned that all manufacturing will find its way to increase capacity utilization, whether by catering to global growth or by catering to local growth. In the last 4 months that we haven't chatted, where have you seen evidence, if at all, of this coming out, whether by way of starting of delivery of numbers or by commentary from the managements? Which pockets, which themes within this whole wide basket of manufacturing and services have started to look promising, if they have?
So look at your entire commodity basket. Okay, they were basket cases 5 years back. Okay, and today they're all net acquirers. Okay, look at one good commodity year and what it does to balance sheets. It completely transforms them. Look at what's happening within that space, and within that space, the scramble for the last solvent asset is on, because the timeline to putting up a new plant okay, is significantly longer. That's where all the cash flows are going to come from. Okay, so I can put a generic statement saying that everything that's got to do with manufacturing will do well. But yes, you'll have to align yourself with individual pockets. Okay, there's some engineering businesses that are doing extremely well with very robust balance sheets. Commodity space are doing very well with very robust balance sheets, but there you got a valuation criteria which is showing up, which may not be. I mean, the large part of the gains are already off the table. Okay, some part of the automobile business which is not consumer related could also be a very interesting play, because there the optimization of capacities should growth normalize or come back in, or should policy initiatives come through, could really kickstart the entire cycle all over again. Okay, I've been talking about media for a pretty long period of time, but not long period, it's about a year and a half from there, and all demand drivers to be fulfilled has to get communicated to the end user industry. So all those cash flows get to get deployed into creating new business opportunities, and all of that will come back into the cycle. Okay. So if you if you just go across corporate India and look at balance sheets, whether it's chemicals, automobiles, services businesses, and services businesses, we look at it from an asset turnover basis. A lot of them have reasonable amount of capacities to optimize. Okay, so the next cycle is just going to be driven by optimization of existing capacity and streamlining of costs, which India's been doing for the last 2.5, 3 years. All of that is going to be material into the next 3 years.
Okay, so if I can just scratch surfaces of 2 or 3 of the pockets that you mentioned. You're right, you've been speaking on media for maybe the last couple of quarters, maybe more, but at least the last couple of quarters that I know. What within media? Would it be this whole exhibition platform? Would it be the distribution platform? Would it be content creators? So where do you think we will find more predictable winners, if you will, according to you?
So where's the value chain? Is it last mile? Is it the broadcasters, or broadcasters or the content managers? Where is the entire value chain sit? So obviously the last mile has its challenges, but the last mile has already been seeded. Virtually every paying customer has already got a connection out there. Now the need out there is to optimize. You optimize it with content. Okay, your broadcasters always sitting up with a lot of inventory because the markets have been dead for almost the last whole of one year, and everyone's on a spend freeze. So both have different challenges and different opportunities. Okay, but like I said, as long as there's no new supply coming in, as long as the capex cycle is over and all these businesses are breaking even at low capacity utilizations, you have to wait for the environment to bounce back. So it's a very generic statement that I'm making, but even if you go into the next year with a 5-6% growth, advertising will come back. Consumer spends will come back. Okay, the larger picture is how do you take the near-term cash flows from this pool of companies or from the micro environment and transition it to the next cycle of creating jobs, creating employment, creating incremental amount of cash flows in the hands of the consumer, creating incremental amount of demand, and get the cycle kick-started all over again. I think the bigger challenge is more long-term than it's near-term.
Yeah, it is, but I'm just trying to think from your definition of you wanting to make sure that the numerator is standstill. I would
the denominator.
Denominator is standstill. Sorry, excuse me. Probably these cable stroke DTH companies fit out there, right? They are done with a large part of their capex, so to say, and now every incremental money that a viewer throws in would probably add to their numbers.
Yes.
But it's an industry that's really been butchered. You think it'll come back?
It's usually the case, right?
Okay.
So it's also a case wherein today, if there's another guy who wants to set up a cable distribution company, he's not going to get access to capital. So what do we like? So you also need to realize that if you pick up multiple industries like this across, we're looking for a 60% or 50% strike rate. Will be, and all of them are at the bottom end of the cycle. So this one represents one of them.
Well, with that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thanks so much for watching.
Life's so